Welcome back to Strongman Personal Finance. We got to react to Palantir because they just had earnings. I'm yearning for these earnings. And this is going to be Strongman looking at Palantir earnings like he's never looked at them before. You want to know why? Because I haven't even looked at them. You know what I did look at? I looked at the stock price, and the stock went up. And you know what that means, ladies and gentlemen? You buy the stock, bro. So Palantir is a cult, okay? You can deny it. You can get mad at me and say, it's not a cult, strong man. There's just 100,000 YouTubers that only talk about Palantir. But that doesn't mean it's a cult, strong man, right? It's a freaking cult. Shut up. Okay? So here we go. Palantir. It's up 21% after hours. Now, people were like, strong man, talk about Palantir. I'm like, I'm not going to talk about it unless there's earnings or some kind of material event, okay? Now we're going to talk about it. All you clowns who are getting mad. Oh, please talk about Palantir, strong man. Now, before you celebrate, before you tell me that Chicken Genius is a clown, not a clown. He is a clown, obviously. But before you tell me Chicken Genius is actually a genius and all these other guys are geniuses, let's zoom out a little bit. So a lot of these shills, never forget, bought Palantir when it was up here, okay? See this? Big, strong spikes right here, okay? And now it went up, and now they're celebrating. So let's go ahead and look at the earnings. Why did the stock go up? Oh, my God. So Palantir reports its second consecutive quarter of positive GAAP net income. Remember, last quarter, they had positive GAAP net income, but their operating income was negative. GAAP EPS of 1 cent. Why? Wait a minute. If I own a share of Palantir, I have 1 cent of profit per share? Well, I can't even. I almost said something really bad there. Never mind. So let's go ahead and read the earnings. So they had 1 cent of profit, GAAP profit per share. Good job. We were profitable again this quarter, and we now anticipate that we will remain profitable each quarter through the end of the year. Alex C. Karp, what a name, co-founder and chief executive officer of Palantir, wrote in a letter to shareholders, the depth of engagement with the demand for our new, oh no, I'm already short here. The depth of engagement with the demand for our new artificial intelligence. Come on. Okay, look, when I see a company talk about AI now, it scares me, okay? Because AI is the new fad. It's the new thing. Oh, AI, ChatGPT, AI. Everybody's talking about AI, okay? If somebody pumps AI all the time, it terrifies me. Now, I don't know what this AIP is with Palantir, but I just don't like seeing the words artificial intelligence, okay? I just don't like it. It scares me, all right? Continuing on, look at the numbers. GAAP net income of $17 million. They had $17 million of bottom line GAAP net income. And I cannot take that away from Palantir. GAAP income from operations of $4 million. They actually, so this is more important to me. So you're always like, oh, everybody's like, oh, strong man, you only care about profits. Yeah, I do. Okay. But profits are, there's more nuance to profits. Okay. There's net income, and then there's operating profit, and then there's gross margin. And those all play in. Okay. I've seen companies that have massively negative operating margin, but they have some kind of one-time recurring event that gives them positive net income. But that doesn't mean they're profitable, if that makes sense. But whatever, you can watch my last video. GAAP earnings per share of 1 cent per share, and adjusted EPS trash. Now, here's the second big thing, okay? Total revenue grew 18% year over year to $525 million. So apparently revenue smashed expectations. So if we go look at the prior quarters, there was a concerning trend with Palantir where they had pretty significantly declining quarter over quarter or year over year, quarter over quarter, whatever. Revenue decline or revenue slowed down. The rate of growth of the revenue was slowing down significantly because everybody was talking about how Palantir was going to grow at 30% revenue. Oh my God, it's the future, bro. But you can see a clear trend here in the revenue growth rate year over year. Down, 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 down. Now they've broken the trend because now their year-over-year revenue growth rate is 18%, but that's just a rounding. That's just rounding from the prior quarter. Okay, their revenue growth rates have massively slowed down. This isn't some kind of massive reversal, okay, but they've at least broken the trend, but barely. But if you can't see this clear trend of revenue growth rate going down, 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 if you can't see that trend, you're smoking some crack, okay? Okay, so we're going to have to see in the next couple of quarters what happens with that. Commercial revenue, government revenue, customer count, blah, 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 blah. So we're going to go we're going to look at the financial statements in a second. Cash from operations of $187 million, representing a 36% margin. I've talked about this 1,000 times. It's because they have high stock-based compensation. An adjusted free cash flow of $189, representing a 36% margin. I don't even care about their cash margins, okay? This is one of those businesses that like manipulate. It's a grift almost. It's like, look how much cash flow we have because they have a lot of their compensation with stock-based compensation. Do you understand? Okay. So let's go ahead and look at the actual financial statements because, they like to fluff themselves, but I like to look at the numbers, okay, and take my own thoughts. So revenue has obviously grown year over year. Obviously, okay. Cost of revenue has gone up yet. Let's see what the gross margin was. See how their gross profit is doing compared to other quarters. So 417, 521 divided by 525, 186. So their gross profit was 80%, which seems in line with their prior gross profits. Let's double check. Yeah. So basically, they have a very, very, very high gross margin. But that's not the only margin that you have to look at. You have to look at the bottom line margin as well. Okay, so their gross margin has stayed the same. That's good. Sales and marketing has grown. Research and development has actually slowed down. I mean, it's grown, but the growth rate of R&D has really slowed down relative to other things. And they've actually cut general and administrative expenses. I'm wondering if most of this is because of stock-based compensation. That's probably why you see very small growth in R&D and a decline in general and admin. Probably stock-based compensation, okay? So while revenue is up 18%, total operating expenses have grown. 413 divided by 319, 393 have grown by 6%. So you see how revenue grows at 18% and operating expenses only grow at 5%. You're getting closer to profitability. Okay, well, they're profitable now. Okay, interest income, they have a lot more interest income. Okay, so we could see a big reason that their profit, their net income, their bottom line profit is larger than their income from operations is because they have a ton of interest income. Because they probably have a huge cash war chest and they probably dumped it into treasuries, and treasuries are paying pretty good, okay? But their operating margin is finally positive. That's great, but it's like nothing, okay? Like their operating margin is, let's calculate it real quick. 415 divided by 525, 186. Less than 1%. Okay, their operating profit, their profit from their operations is less than 1%. It's an improvement, I'll give them that, but they're still not that profitable. Okay, but their GAAP net income, yeah, because of interest income. That has nothing to do with their business. You want to look at the core business. Who cares about interest income? Interest rates can go down. They can spend a lot of their cash. That's irrelevant. What matters is the operating profit. Okay, but they're GAAP profitable and they have operating profit, albeit less than 1%. Good job there. Okay, so let's see. Weighted average shares outstanding. Diluted shares outstanding have gone up year over year by about, 10%? 10% growth in diluted shares outstanding. Very, very interesting, okay? So you want to look at shares outstanding and then dilutive securities because there was a lot of instruments that a company can issue that could potentially be converted to stock, to common stock, but have not been at the time of the financial statements. But you want to kind of know stuff that could potentially be converted to stock in the future because that's potential future dilution. So you want to look at the weighted average shares of common stock outstanding, basic, and you want to look at diluted. And the diluted tells you a different story. There's been roughly 10% dilution if you look at it from a potentially dilutive standpoint, okay? So obviously we know what's going on with that. We've talked about it 1,000 times. Stock-based compensation has massively declined. Okay, look at that. Yeah, that's basically why general and admin had a decline, it looks like. Stock-based compensation expense is finally coming down, okay? Amazing, amazing, perfect, perfect. So what would their profit be without stock-based compensation? Let's see. So if they didn't have any stock-based compensation, their operating profit would be, let's do this, 4,115 plus 114,714 be 118 million divided by 525,186. So their operating profit would be 22.5% if they had zero, and I mean zero, stock-based compensation. Okay. That's a lot better. I'll give them that. But realistically, it's not going to get down to zero. But that's like the pinnacle, ideal, perfect operating income that they would have had this quarter if it wasn't for stock-based compensation. So obviously stock-based comp is weighing down on their profitability, but this is kind of where they'd be much more profitable than they're at right now. 22.6%. All right. Balance sheet, cash and cash equivalents went down. So a lot of cash went somewhere. Oh, it went to marketable securities. So by putting money in marketable securities, it's like, bonds, short-term bonds, debt like that, government treasury, stuff like that. That helps them maintain GAAP profitability because there's higher interest rates. If they put $1.6 billion into short-term treasuries, yeah, they're making a pretty penny off of that, okay? That's a big reason why their GAAP net income is decent. I wouldn't even say it's decent, but they have GAAP net income, okay? Rates are going to go down. That's why someday. That's why I wouldn't necessarily factor that in. But the question that I really have is like, why are they sitting back? Why are they sitting on so much cash? Like, what are they doing with this cash? It's just sitting there. Okay. Accounts receivables down a little bit. Prepaid expenses down, whatever. So overall, their total current assets have gone up. So they've generated positive operating cash flow, no doubt. PP&E, no major changes. Let's see. Really no major changes in assets. The main difference that I see is that they put a lot of money into marketable securities, which makes sense. If you have a bunch of cash, you at least want to park some of it in, treasuries and generate some yield. Current liabilities. Let's see. Deferred revenue is up. That's eventually going to become revenue. Nothing really crazy there. Deferred revenue non-current. This is revenue that they're expecting to earn. They've been paid in advance with cash, but they're not going to earn it for a year or more out. That's what non-current deferred revenue means. Overall, I mean, obviously, there's nothing bad about their balance sheet. Okay, obviously, they're not going to go bankrupt anytime soon. I would not sit around and worry about Palantir going bankrupt for a long, long, long time. They have a war chest of cash. What they're going to do with it, I don't know. Are they just going to be like are they going to become a bond fund? Is that their goal? They're just going to hoard cash and then buy treasuries and become a short-term treasury fund in disguise? Is that their master plan? But overall, yeah. So let's see. Total equity is 2.7 billion. So their equity has gone up. Okay. How did their equity go up? Well, it went up through common stock issuance, and the accumulated deficit went down. So basically, the vast majority of their increase in equity still came from common stock and additional paid-in capital. Very, very good. Cash flows. Let's see. Operating cash flow is a lot higher. Okay, that's a big part of it is from deferred revenue. Let's see what else. Yeah, basically their cash flow is a lot higher. A lot of that. So basically they're getting a lot of advance payments of cash, and then they're going to eventually earn that as time goes on. Let's see. They didn't really buy any property, plant, equipment. They put a ton of money into marketable securities. Nothing insane there. That makes sense to me. They're just parking money in short-term bonds, basically. At least it's not Bitcoin. Okay, I'll give them that. And then proceeds from the sale of alternative investments. What is this? They sold did they sell the rest of their Dogecoin or whatever they had on their balance sheet? Okay, so basically they had positive operating cash flow. They put most of their cash. A lot of their spending was just putting it in treasuries. And let's see, they had some cash come in from exercising stock options. Okay. So overall, here's their adjusted operating margin. Great, wonderful, delicious, superstitious. Overall, I mean, obviously Palantir is getting better. I'm not going to say they're not. They're obviously profitable, both on an operating income basis, which is good, and a net income basis. But they're not like this insanely profitable, insanely amazing company. Their revenue growth rate still slowing down pretty significantly. They kind of buck to the trend, but not really. I mean, the revenue growth rate was 17.5% the last quarter. Now it's 18% year over year. Wow. Okay. If their revenue keeps slowing down, I don't know. Now, I wonder if they gave guidance somewhere. What's your guidance, Palantir? Oh, our revenue is going to grow at that 20,000%. Elon Musk, we're going to partner with Elon Musk and AI, ChatGPT, and the future, bro. Okay, so Q2 2023, we expect revenue of 528 to 532. Adjusted income from operations, that means nothing to me. Okay, and GAAP net income. So they expect to be profitable next quarter. Their revenue growth rate year over year for Q2 will be, let's see if they're bucking the trend, okay? Q1, Q2, so 473. Let's see. So best case, 532 divided by 473. Their revenue growth rate is slowing down so much, okay? So what they're telling you is next quarter, best case, and maybe they'll beat it, is their revenue growth rate year over year is going to be 12.5%. Their revenue growth rate is collapsing. It's still going down. That is not good, okay? And that's the best case scenario. Their revenue growth rate is massively slowing down. This is almost becoming a mature company. Unless they can change the trend. I don't know. To me, it doesn't seem like that's that great, okay? And then revenue for the full year 2023, 2.235. So let's compare that to 2022. So in 2022, they generated 1.9 billion of revenue. And they're projecting best case 2.23 billion. So 2235 divided by 1905. 17%. Okay, so they're projecting for the full year 2023 compared to 2022, their revenue is going to grow projected 17%. That seems like a massive slowdown to me. I don't know about you. So cool. You guys have. So what's going to happen is this company's going to become like decently, like eventually the stock-based compensation will hopefully go away, right? And they'll become decently profitable, but then they won't be growing revenue anymore. Then it'll just be this mature company, basically a value stock. If you catch my drift. So I don't know. That's kind of my thoughts. I mean, same concerns I've always had before. I mean, yeah, they became profitable. Stock-based compensation is running out. That eventually gets amortized away. But if they're not growing their revenue, what is this? It's a value stock almost. It's getting there. And their next quarterly projection, that's not good revenue growth rate. It's massively slowing down. And then what's it going to be for the full? What's it going to be for Q3? 10% year over year growth rate for revenue. What's it going to be for Q4? 8%. You're looking at a value stock almost. Okay. Oh, but they're profitable. So that's kind of my thoughts. We'll do some comments. Let's see. Just me here. I still have Palantir. You're Palantir. We have to follow Chicken stock moves now. Exactly. He knew this was going to happen. Okay. You should buy his options course. He could retire early. Chicken head genius. Chicken butt crack. Overvalued with only $2 billion of revenue a year. I don't get it, man. Like, if it was growing revenue at 30% and they were getting profitable, okay, that's a different story. But you can see that clear trend of revenue growth rate going down, 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 down. Just saying. Who's a bigger clown, Chicken Genius or Lefebvre? Oh, definitely Lefebvre. The AI. If a company puts AI, ChatGPT, or whatever in their earnings, it's kind of like, that scares me. It's kind of like the, what were the words? Disruption and innovation. Those two words, if I saw those everywhere, I was like, this company's a scam. Like a year ago. Bro, but Palantir has new contracts, just like the statute of SKU expansion, bro. Yeah, revenue, my avenue, bro. If we get Strongman behind us, we're going to Uranus. This is going to be a value stock. I'm telling you. That's what it's going to be. It's going to be like Coke or something. oh, revenue growth 4% per year, with inflation, and that's going to be Palantir. I made more on Palantir than Strong. You did. You absolutely did. Palantir to zero yet? Sadly, no. I made more on Palantir than Strong. Good job. You're such a freaking amazing investor. Just keep going all in stocks. Why don't you? Let's see. Lefebvre and Chicken Little will look more like genius. Yeah, okay, let me show you the genius of Lefebvre, okay? This is Palantir. You guys see this? See this little blip right here? This is what you guys are celebrating. This is Palantir. What victory did they have? But everybody's so stupid. They're just like, oh, it went up after hours. That's good. Bunch of clowns. Let's see. The shills are celebrating. Exactly. But Palantir went up year to date and Baba down. I can't deny that. I can't deny that. I should have bought Palantir instead. I am such an idiot. Probability that zero US defaults next month, 0. Let's see. Bottom line margin has a different meaning at the truck stop. It definitely does. So it's a buy? I don't know. I'm not buying it. Would you consider regional banks if too cheap to ignore, for example? Well, you say that and then they can go bankrupt. So it's a gamble. Their prices have collapsed for a reason. That's all I'm going to say. Let's see. Sounds like Strongman. I'm not a Palantir shill. Am I shilling Palantir? Is that what this sounds like to you? Let's see. Finance Junkies YouTube channel will speak about Palantir today. Who are they? Will you make a video unbanning Ken Freshie for $40? No, that's going to cost you $400. $400, and I will unban Kid Freshie. Let's see. Carp went and bought. Of course, yeah. Let's buy a shiny rock, guys. Yeah. Let's see. Strongman, Palantir will outperform VT. Too bad for you. That's right. I'm just dumb. Oh my God. Oh my God. It's him. It's Alex Carp. Hey, man, you want to come on? If he actually was here, I'd have him on. That'd be hilarious. Imagine if Alex Carp came on my channel right now. That would be hilarious. Okay. Let's see. Shut up, loser. They could still get more customers. They haven't tapped the global customer. Yeah, their revenue growth rate's going down every quarter. But they have 1 cent of earnings per share. So shut up, idiot. Let's see. We need a deep dive into PayPal. Some say it's a dying business. Yeah. You know what? You want a deep dive in PayPal? You give me $40. Let's see. Strawman, please talk about Daniel Stonk Prunk as well, since he pumped True Leave stock and isn't talking about it anymore. What is that? What are these stocks? If only Strawman can make 1% the amount of money Jeremy makes. Do I make 1% of what Jeremy makes? I definitely make 1%. There's no way Jeremy makes that much more money than me. Let's see. Strongman can analyze the stock so fast. He is a human product of AI. ChatGPT AI Strongman. ChatGPT AI. Let's see. Why'd you ban $40? I'll tell you the story. Palantir worth $16 billion. Sure. Have you everything money made up yet? Hell no. They can lick my you-know-whats. All right, that's my Palantir analysis. I'm going to try to get out another video before I tutor at 9 o'clock. All I do is freaking work. Palantir, I'll pay you $40 for analysis of Wish, but I want to guarantee that video will be 40-minute video. And 40 minutes on Wish stock? You're getting 20. I'm not doing a 40-minute video on Context Logic stock. You know what I'll do? I'll just scroll through the website for 30 minutes, okay? If you pay me $40. I'll do it. But you're not getting 40 minutes of analysis. That's ridiculous. Let's see. All right, guys. Talk to you later. Cheers.